All right, we're heading into PPI and CPI with very, very small ranges the first 2 days of this week, and that continued today. Even though, on TV I heard that we had quite the volatile session today, but a really, really small range. So we'll take a look in terms of, does the small ranges the last couple of days impact like how bullish we are, and does it impact our expectations going into the end of this week? Does it start to show? Is it a crack? Is it a sign of weakness? So we'll break that down, especially in light of some of the other technical indicators. There is a red flag that has kind of propped up here that I'll highlight for you, something to pay attention to. So I'll kind of give you what I'm expecting and why. And again, looking at the technical indicators as always, looking at the intermarket relationships. That three-headed monster reared its head today. We'll take a look at that, what our expectations are for that, and how that's going to impact the market and how it impacted it today. And then we'll take a look at the sector rotation. As much as we loved yesterday's rotation, not so much today, and I'll show you why and which one outweighs the other, yesterday's or today's. So we'll break that down. And then our trade idea today is another stock that's been on its own bearish move and might be triggering some kind of reversal right now in a very important sector too. So we'll talk about how to trade that. So let's go ahead and get started. Today is Tuesday, September the 9th, 2025. This is the market outlook from marketscholars.com. My name is David Settle. All right, let's start off taking a look at the S&P 500 with the market forecast indicator. As you can see, we rallied again. This is the fourth day out of 5 that we've been to the upside. The near-term line still on this bullish run that it's been on for the past so many sessions. This is the one down day in the middle is all that's brought the near-term line just slightly out of bullish territory, but now it's back up. Again, small ranges. It's a little bit bigger by the end of the day today because we pushed up the new highs. But we did only a 35-point range. Again, small compared to that average, the ATR 54 points. That is a very, very extremely low level. Again, relative to the actual value of the index at 65.12. So it is a small range. It's the last couple of days. We do have CPI coming up in the next couple of days. PPI tomorrow, CPI the day after that. So that will impact things. The intermediate posture obviously strongly bullish. The intermediate line rising almost to the 90th percentile. The market sentiment line falling, but still in the upper reversal zone as well. So that's a good sign for the markets. You can see we are still 1.5% above the moving average. So we're still again, we're not strongly bullish. We're on a very mature trend. And we've definitely slowed the pace of the move down considerably. But we are still in a strong trend. Even if we don't have a lot of momentum. You don't necessarily need a lot of momentum to maintain a bullish trend, and as you can see. So, so you get days like today, and that's okay. Days like today are not a bad thing for the market. The NASDAQ 100 also is up. You can see the near-term line back into the upper reversal zone, still on the same near-term rally from that bull tag that we got a week ago. The momentum line, of course, down simply because of the small range, 154 points, well below the ATR of 269 points, which again is extremely low relative to historical levels for compared to the actual value of the index. But dark green shading a green line. I mean, we can't argue with that. We're getting light pink shading sporadically, but every time we get a little near-term dip, we bounce right back up for a bullish near-term rally. And that's the case right now. We're not quite up to new highs yet, but it is a higher near-term high than the last one we got there. So that's a positive sign. If I take a look at the Dow Jones Industrial Average, you can see the intermediate line strongly in the upper reversal zone, almost the 90th percentile. The near-term line also still in the upper half of the chart, still in bullish territory. So that's a good sign. We don't have new highs, but I think that's a new closing high. Let's see here. This close was at 5th. Yeah, so we are higher than all of these closes that we have. So we do have a new all-time closing high in the Russell, and just a couple of days away from the all-time intraday high. Intermediate posture again, the intermediate line at least above market sentiment, though it's falling, but it's falling at high levels. So if anything, it'd be weak, very, very weak. But again, considering where the intermediate line is, that's not really an issue. It's only an issue when the intermediate lines fall, market sentiment is falling, and the intermediate line crosses below it to keep it falling. And that's obviously not the case right now. All right, and then finally, let's take a look at the Russell 2000. It's down today 0.5%. It brought both short-term sentiment lines lower, the near-term momentum line almost into oversold levels, which, again, pretty much produces another buy the dip signal here. The near-term line's not very low. It's out of the bullish territory, but it's not, not in the lower half of the chart, not in the lowest, not in bearish territory. So it's not the strongest buy the dip signal. It would be better, and probably will be better, give it another, if we do follow up on this with another selling day tomorrow for small caps, then most likely that would lead to a buy the dip signal probably coming out of that CPI report on Thursday. All right, well, that does it for the Market Outlook preview video. You can unlock the full version of tonight's video at marketscholars.com. All of our subscribers get access to that, starting with our foundation tier at just $29 a month. You get access to the full version of the Market Outlook video, including the trade idea that comes at the end of each Market Outlook video. You also get access to the Market Outlook Live, where we post the trade before the market closes. So we did it at 3:30 Eastern time already today. We also talk about how to manage and whether we should get out of the old trades that we're still in from old Market Outlook videos. That's all done in the Market Outlook Live. And then you also get access to the Market Outlook Live Trade Tracker, where we track the results of all these trades according to the risk. We track our risk and how much we make according to the risk. All of that's tracked in our trade tracker. So you get access to all of that, again, for just $29 a month, or less than $1.40 per video. Thank you for watching. Subscribe to our YouTube channel. Hit that thumbs up icon. Comment down there on the video. Share the video with anybody else you think would be interested. Follow me on Twitter for more content between the videos at DavidSettle42. Follow me as well on LinkedIn, Facebook, any other social media channels. Like our content there too. That will make sure you keep getting our content in your feeds. Have a great rest of your Tuesday night, everybody, and we'll see you all tomorrow.